In this series, we're growing a Robinhood account from $0 all the way to 1 million, and I'm showing you every step of the way how I get there. So today in the account, it was a huge day. We made 12%. We're up over $6,225, and this was mainly driven by the fact that we are net short both the S&P 500 as well as a few other positions. You can see here that we're at 82% on SPY put butterfly spreads as well as semiconductors. We're short BITO, which is Bitcoin ETF, as well as Palantir, and we are long MSTZ, which is really just short MicroStrategy, 2 times leveraged ETF. So betting against the market, betting against crypto. In this video, though, I want to cover the current strategy and how it's going to evolve over time, because right now we only have $6,000 in the account and we are taking a lot of risk. We are mostly purchasing options and hoping that the price moves in our favor for us to collect a hefty return. But the strategy is going to change over time. What really we want to do is what I call the cash flow method. And really that's buying shares of an underlying company that we really like for the long term, and then selling both call options and put options against that position. And to give you probably the best way to explain this is to provide an example. We can look at GameStop. So GameStop is right now around $32. If we wanted to buy 100 shares of GameStop, it would cost us around $3,200. And then we would sell a covered call, a call contract, we'll say a $40 strike. If we sold the call, we would get around $245 in premium. And so you can see here, $32, 100 shares of GameStop, that would cost us $3,200. And then on the premium side of things, we would receive the $245. And days to expiration is 32. So in 32 days, we would receive $245. We would have to put up $3,200 to buy the shares. We would receive a 7.66% return over 32 days. So not bad whatsoever. And then if you divide that by the number of days times 365, you can see that on an annualized rate, so this is our return or our ROI, and then our annualized rate is 87%. So that's huge, right? That's like almost 8 times better than what the market returns on average per year just by running this strategy. So you can see that I can collect this as long as the price doesn't go over $40. I won't get assigned and have to sell my shares at $40. But I also own the shares, right? So if the price goes up to $40 and I have to sell at $40, well then that's $4,000, right? So the amount of money I'd make on the shares is $800, and then I'd also collect the $245. So I'd make $1,045 on this position if GameStop went over and above $40, and then I'd be assigned and I'd sell the shares at $40. No big deal. I bought them at 32, right? Now, how could I lose money? Well, of course, if GameStop went down, say it went to, if it went to $30, then that's now my share price, my total shares or position is $3,000. And then I lost this minus that. I lost $200, but I still collect that $245. So I'm still up $45 on this position. So it also provides downside protection. Now you can see that you need to have a lot of money in the account to actually be able to do this efficiently and generate big returns. And I only have $6,000. So if I was running this strategy, I could really only do this with like 2 contracts at a time, and I'd have to put up $6,400 of GameStop shares to actually run this strategy. So that's why I need the account to be around $25,000 to actually start running this strategy and generating more consistent and as well as safe returns, and then having that protection. The other side of it, of course, is I can sell put contracts, right? So I would put up cash and then just sell put contracts because I'm bullish on the company going up in the long term. So I can make money by selling calls, by selling puts, as well as the share appreciation for the company. So if you can pick a great company that's going to go up over time, this is almost like a bulletproof plan for you to generate really good returns and even better returns if the price is going up over time. So you can see how crazy it could be, where you could probably make like 200 or 300% in a year. In a normal bull run, prices on average are just floating up to the upside like we had over the last 2 years. But right now we are seeing a lot of volatility in the markets. And because of those things, you got to take some risk off the table, but also look for shares of great companies that are selling at a discount, so then you can run this strategy. So here in this video, though, I'll just leave you with a few different trades that I'm looking at, trade setups. GameStop, of course, this is an interesting one. It's at $32. Roaring Kitty, who's like the Twitter phenomenon, big GameStop advocate, who's likely going to tweet on January 9th, and that will probably provide somewhat of a bump on share price on that day. We just learned that Jimmy Carter, because he passed away, they're going to be honoring him by closing the markets on January 9th. So I don't know how this is going to play. I already have call contracts up to like 36, 37. So if it front runs it, I'll make money. But I'll probably buy some like January 10th or January 17th call options or even shares on the 8th of January, because he's probably still going to tweet on the 9th. And then on the 10th, which is a Friday, we might see a stronger push here on GameStop. So I'd be looking at 37 as well as this 42 level. You can see here there's this like a volume shelf, and then even up to 48 is like an extended target. And you can see that's where we rejected in the past back in June. And then in May, we topped out around 65. So that would be like an even further extended target. But usually when GameStop has a run, management dilutes shareholders, raises capital, and then you have a stronger push to the downside. That's what happened here back in June. So that's something to always keep an eye on. You don't want to be in this position for too long. You want to sell into strength. Next, looking at FFIE, I actually posted about this in the Discord. I'm not in this position on the Robinhood challenge, but I am in this position in a different portfolio. I've entered into some shares. You can see that price went up 78% today. I gave a call out earlier here today in the Discord. If you want to follow along, I'm always posting my entries and exits live there, as well as you can just ask me questions live. So a lot of value there. But if I was playing FFIE, this is really like a sympathy play with meme stocks. You can see here that back in May, why is this not showing? Hold up. FFIE. Okay, you can see here that back in May, this actually went up to $156 from $1. So when GameStop ran, FFIE also ran. And that is kind of like the same play here. When all the meme stocks start running, you have like these short squeezes and you might have a push to the upside. It also helps that the market is rolling over. So like SPY's in this downtrend, because institutional funds and long short funds are usually long like Apple, Nvidia, Meta, Microsoft, but then they're short meme stocks and other lower, smaller cap companies like GameStop or FFIE or Holo, which is HOLO. So like a lot of these are squeezing to the upside while the market is showing weakness, because those institutional funds are getting margin called on their positions, and then they have to cover out of those positions. So you have there's more likely short squeezes when there's a lot of volatility and the market is selling. So that's always something to keep in mind. And then looking just at MicroStrategy, you can see that I'm really bearish on this. I have some lines here showing stronger moves to the downside, but it does have this gap at 280 in volume. You can also see it here. So it's going to come down and fill that gap at 280. Even today, when Bitcoin had a stronger push and then it sold, MicroStrategy really wasn't participating, because they're constantly diluting shareholders by authorizing shares, raising money, and then buying Bitcoin at a premium to spot. And because they're doing that, they're raising the cost basis of all MicroStrategy shareholders, and then they're also diluting their ownership. So it's like a triple whammy, double whammy, if you will, and this price is just going to fall much further. I'll probably start taking some profit around 280 on my MSTZ shares. But honestly, I think this is going to go much lower to like this 180 mark, and it likely will fall even further than that. And it really just depends on Bitcoin. So lastly, just looking at Bitcoin, we still haven't broken this like 92,300 level. We're just like hovering around it. You can see here it's just like kind of spazzing on the line. That's like a key support zone. And if it breaks under that, we are going to see more of a waterfall. And there's no volume here. So when there's no volume, price likes to move quickly in that zone, and it will probably fall down to this like 76, 75 level. And even if you weren't looking at the volume profile, so if we take this off the screen, you can even just see it here with the candle. You see this candle, it just moves really quickly in this zone between like 70K all the way to 88,000. And so price likes to move quickly between those levels. And so if we break through here, you know that we're going to drop to this 72 to 75K in a hurry. So a lot to look forward to. There's going to be a lot of volatility in the market. Hope you enjoyed this video. There's a lot of value here. Let me know if you have any questions in the comments below or on Discord. I'm always active since I work remote. But anyways, hope you enjoyed. I'll see you in the next one. Peace, guys.